Have you ever stared at your screen after a losing trade and felt completely defeated? Your heart starts racing. You replay every decision. You tell yourself, if only I had waited a little longer. If only I had entered later. If only I had trusted my analysis. And before you know it, you're no longer thinking like a trader. You're thinking like someone trying to escape pain. The truth is, most traders don't fail because they can't find winning trades. Most traders fail because they cannot accept losing trades. And that's exactly what we're talking about today. How to accept losses in trading using the mindset of one of the greatest traders of all time, George Soros. Now here's something that might surprise you. George Soros wasn't famous because he was always right. He became legendary because he knew how to handle being wrong. In fact, Soros once said, "It's not whether you're right or wrong that's important, but how much money you make when you're right and how much you lose when you're wrong." Think about that for a moment. Most beginner traders are obsessed with being right. Professional traders are obsessed with managing risk. That's the difference. A beginner wants to win every trade. A professional wants to survive every trade, because survival is what allows you to stay in the game long enough to become profitable. Let me tell you something that every successful trader eventually learns. Losses are not a sign that you're failing. Losses are the cost of doing business. Imagine owning a restaurant. Every month you pay rent. You pay electricity bills. You pay staff salaries. Those expenses don't mean your business is failing. They're simply part of running the business. Trading losses work exactly the same way. They're business expenses. They're the price you pay for participating in the market. But many traders treat losses like personal attacks. A losing trade happens and suddenly they feel stupid. They feel embarrassed. They feel like they've failed. And that's when the real damage begins. Because once emotions take over, discipline disappears. You move your stop loss, you revenge trade, you double your position size, you take random setups. And what started as a small loss becomes a disaster. The market didn't destroy your account. Your inability to accept the loss did. I remember a trader who spent weeks building a small account. He was patient, disciplined, focused. Then one day he took a loss. A normal loss. A loss that fit perfectly within his trading plan. But instead of accepting it, he became angry. He immediately entered another trade, then another, then another. Within hours, he lost more money than he had made in an entire month. What hurt him wasn't the first loss. It was his reaction to the loss. And that's a lesson every trader must learn. The market doesn't care about your feelings. The market doesn't care how badly you need the money. The market doesn't care how much analysis you did. The market will do what it wants. Your job isn't to control the market. Your job is to control yourself. And that is where true trading success begins. Let's talk about something most traders don't want to hear. You can do everything right and still lose money. Think about that. You can follow your strategy perfectly. You can have proper risk management. You can wait patiently for your setup. You can execute flawlessly. And the trade can still lose. That's not failure. That's probability. Professional traders understand that every trade is simply one event in a long series of events. No single trade matters. What matters is the outcome of hundreds of trades. Imagine flipping a coin that gives you a statistical edge. Even if the odds favor you, you're still going to have losing flips. That's normal. Trading works the same way. The edge plays out over time, not on every trade. This is why George Soros and other legendary traders never became emotionally attached to individual positions. They understood that being wrong is part of the game. In fact, the faster you can admit you're wrong, the faster you can move on to the next opportunity. One of the biggest mistakes traders make is identifying themselves with their trades. They say things like, "I lost. I failed. I'm a terrible trader." No, you are not your last trade. A losing trade is an event. It is not your identity. Read that again. A losing trade is an event. It is not your identity. The moment you separate your self-worth from your trading results, everything changes. You become calmer. You become more objective. You stop chasing losses. You stop trying to prove yourself. And you start making decisions based on logic rather than emotion. Here's another powerful shift. Instead of asking, how can I avoid losses? Ask, how can I manage losses? Because losses will happen. There is no strategy on earth that wins all the time. There is no indicator that eliminates losses. There is no mentor, signal provider, or trading course that can make losing disappear. The goal isn't to avoid losses. The goal is to make sure losses stay small. A professional trader might lose 50 times in a year, but those losses are controlled. They're planned. They're expected. And because they're controlled, one big winner can erase several small losses. That's how professionals think. Now let's get practical. How do you actually accept losses? First, risk an amount you're comfortable losing. This sounds simple, but it's incredibly important. If losing a trade will ruin your week emotionally, you're risking too much. Reduce your position size. When the money at risk is manageable, accepting losses becomes much easier. Second, create rules before entering a trade. Know exactly where you'll enter. Know exactly where you'll exit. Know exactly where you'll place your stop loss. Make those decisions before emotions enter the picture. Third, keep a trading journal. Every loss contains information. Every loss teaches something. When you document your trades, losses become lessons instead of emotional scars. Fourth, focus on execution rather than outcome. Ask yourself, did I follow my plan? Did I respect my risk management? Did I take a valid setup? If the answer is yes, then the trade was successful regardless of whether it won or lost. Because your job is to execute correctly. The market decides the result. And finally, remember that every great trader has experienced devastating losses. George Soros had losing periods. Paul Tudor Jones had losing periods. Stanley Druckenmiller had losing periods. Every successful trader you admire has lost money. The difference is they didn't allow losses to define them. They learned. They adapted. They moved forward. And that's exactly what you must do. The market is going to test you. It will test your patience. It will test your discipline. It will test your confidence. And sometimes it will test your ability to accept being wrong. The traders who survive are not the smartest. They're not the luckiest. They're not the ones with the most indicators. They're the ones who can take a loss, learn from it, and come back the next day with a clear mind. Because trading is not about perfection. It's about consistency. It's about discipline. It's about managing risk. And most importantly, it's about understanding that losses are not your enemy. Refusing to accept losses is your enemy. So the next time you take a losing trade, don't panic.